Okay, good evening, everybody. I think we got enough people in here. It's a little after 7 o'clock, so I think we can get started. Um, so this evening we're going to talk a little bit about the markets, my point of view on where we've come from, what's happened over the past couple of days, and a little bit of an analysis on where I think we can go from here. Um, we're going to talk. I mean, we can't do this without talking about the election. And I always like to keep politics out of it as much as possible. So anything that I mention is not an endorsement of either party. It's just that there are some things that are naturally going to happen based on the way some of these policies were set up. And everything we're going to talk about is strictly has to do with the effect on the market itself. Um, I know some people are perhaps a little heated when it comes to these things, so I just like to avoid the subject as much as possible. So that being said, let's talk about the past a little bit first. Now, I'm gonna for the people that have seen this a billion times, I'm sorry, but it's got to be a jumping off point that we've got to sort of discuss. So I'm going to look at some really long-term picture stuff. We're going to go on a quarterly chart and just talk about this for a second because we have been building up to this week literally for a couple of years now. And the people like people that have been in the ACNI chat and stuff, we've been having these conversations for a very long time. Um, so what we're looking at right here, I took the time a long time ago to break down every presidency going back to Roosevelt, basically how that presidency, how that administration performed according to the market. And for the market, I'm using SPX as the representation. SPX as the index is really the best single ticker you're going to be able to use that's going to give you an overall representation. Even though it is weighted, it's kind of the best we can do. And it's being used across everyone, so it's at least fair. The other thing to mention is that all the numbers that we're looking at here are all measured as percentage growth from the time that the administration took over to the time that they left office. So basically, in most cases, January to January. Um, so a couple of things about the chart, just to mention, most of it is just kind of anecdotal evidence, a little bit of trivia. Um, but there are a couple of points that need to be made about it. So the first thing is, the very first thing is the very small ones at the beginning, because going back to the 1930s, compared to today, the S&P values were so small that you can barely see anything. And when you look at this number and you say, oh, well, during Roosevelt's presidency, the market rose 142%. And when you see just a little sliver of a line, it doesn't seem like much. But, based on what the dollar was at the time, it's still 142% is still 142%. A little bit easier to read them as they grow. Um, there are 2 points, only two presidencies in this chart, not obviously for the entire history of the US, but there were only two presidencies where the market was lower when they ended their presidency to compare to when they started. So the first one was Nixon. Back here, it dropped 23%. And then there was George Walker Bush. That's the second Bush. Now, I wouldn't want people to read too much directly into that. There's a lot of things economically and geopolitically and so many things going on that you can't necessarily look at an individual administration, look at the numbers that were happening at the time, and automatically attribute to those numbers to that administration. There's a lot of arguments to be made about things happening in a previous administration, because obviously the changes that are happening are not things that just change overnight. They take years or sometimes decades to have an effect. People will talk about crime policies during the Reagan administration that, it was like 20 years later that they said what we're seeing now is fallout from some of the things that happened way back then. Um, so when you look at the overall numbers, as an example, so I have to squeeze this down so you can see all of this. One of the things that these numbers have changed slightly because they were done probably midway through Trump's administration. But on average, we were seeing that during Democratic administrations, the market rose an average of 13.74%, during Republican administrations, 8.25. That being said, like I was just saying, you can't necessarily attribute that to the current administration. Um, there are also things like during George Bush's administration, he spent this entire 8 years dealing with a war. So the fact that the market was down, and not down by a lot, well, I mean, 31%. Um, there were an awful lot of other things that were going on, and obviously this guy had a lot of things that he was focusing on. I mean, halfway into his first year, well, a little more than halfway into it, but from the very beginning, it was extremely difficult. So anyway, um, what I wanted to point out was stuff that we had been talking about since at least since the Biden administration took over. It was a little bit after they took over. But obviously, when the Trump administration finished, I worked out the numbers, and during his administration, it grew 67%. Now, remember, it was only a 4-year administration. So when you look at Obama, who was before him, who had 147%, he had 8 years to perform. So you could say that if Trump had continued, that, if we double that number, it still puts it pretty close in the same ballpark as what Obama was doing. So I wouldn't want anyone to look at this 67 and immediately compare it to this 147. It was double the amount of time. So the reason why I'm showing you all of this is one of the things that I've been speculating for almost, well, really, let's say a couple of years, because it was the end of 2021 that I started talking about it, where I said, okay, well, if you think about any administration, this isn't just Democrats or Republicans or whoever, any administration, the current administration who is looking to run for office a second time, it is in their best interest to look as good as possible. And that's why you generally see a lot of spit and polish going on towards the end of the year. All the nice things that you really want to do that are going to make people maybe vote for you, you kind of save some of those for that last year, the run up into the election. Everybody does it. Everybody who's running again does it. And so with that, we knew at the time that the Biden administration was lagging behind. When we were originally doing this, we were down here someplace in he was in the 40% gain range. So, he had a lot of ground to cover. And so my speculation at the time was that we were going to see up into the election, that we would see the market push up. They don't, obviously the president can't directly influence the stock market, but indirectly through the Federal Reserve and programs and stuff, there are things that they can do to kind of help things out. And so we were watching that, and at the time I said, okay, my guess is that for Biden to hit the same level of growth that Trump had, he would have to bring the S&P up to, what's the line I've got here? 6308. It's somewhere, I think it was actually 62 something, but about 6,300 on SPX, about 610 on SPY. And so this was always my goal. And I said, it would make sense to me if they could push that as hard as they could and make it hit just before the election, so that one of the feathers in his cap could be that he could step back and say, yeah, well, we did just as good as he did. Because you don't want to say, oh yeah, the market didn't do as good under us as it did in the previous guy. Now we didn't get there. But that's okay. I mean, obviously, with that in mind and the way it was moving, people that I was talking to, we were always pushing for bullish markets and even though we weren't necessarily playing the indexes, we were focusing more on finding bullish stocks to trade to the upside rather than bearish stocks to the downside, um, which has served us very well. So this brings us to now. Um, so actually, what I'll do from here, I'll just switch over to SPY just because I've got that chart's a little bit cleaner right now. Notice I still have the 610 number marked off in here. Um, Now we've had the election. So obviously, certain things happened. Biden dropped out of the race. Kamala Harris took over. There was a lot of chaos that happened in the last couple of months. But that being said, everything is done now. It looks like Kamala Harris has given her concession speech. So it's pretty much a done deal. And we're seeing that in the market. So one of the things that I'd been talking about in the ACNI chat, the Advanced Charting and Indicators chat, for people that are subscribed to it, we do a live session every Sunday. We scan for stocks and look for potential swing trades in the coming weeks and kind of build up our plan for what we're going to do during that week. And one of the things we talked about a little bit was the election and kind of a review of what analysts had said would happen to the market depending on how the election went. And so the overall, what's the right word for it? The overall consensus that we saw from many analysts was, I mean, there were several things, but in this one in particular, most of them said if the Trump administration wins the presidency, I guess I can't say Trump administration, if Trump won for president, and they also took the Senate and the House, that this would be very, very bullish for the market. There's a lot of speculation about more tax relief for big corporations. He would obviously be pushing for lower interest rates. He had talked a lot about tariffs for foreign governments, and even though there's lots of discussion about his version of what tariffs are and what they actually are, but in the end, if there are tariffs that are imposed on foreign countries, goods from foreign countries and stuff, then yeah, there is an edge to be given in some cases to U.S. companies. So the idea was that if Trump has all these ideas that are be good for businesses, and he's got a government that's a little bit stacked to push this stuff through with weaker opposition, then it would be a lot easier for that to happen, and that will just be good for companies, which is good for the market, for the growth of those companies. And so that's where the idea that would push the market comes from. We haven't really seen any slowdown in any of this. I mean, if you look at the market directly, you might look at a few of these candles and say, well, yeah, it's slowing down. But from the viewpoint of volatility, as an implied volatility across options for the market, we're not seeing that implied volatility dropping just yet. It's only been 2 days, right? So we're going to need some time for this to build. People are sort of, let's say people are putting pieces in place. They're moving things where they want them to be. Steve always says that the market is a reflection of where people think companies are going to be 3 to 6 months away. And so that's what you're kind of getting. People preparing themselves from an investment point of view for where they think these companies are going to go over the next 3 to 6 months. So at this point, from that aspect, all we're seeing is from the market perspective, all we're seeing is good. It looks like we're not seeing any catalyst that looks like it could start bringing the market back down. Yeah, people could start running out of money. We could see that kind of dry up. There was sort of a period where some of these big names, we heard that they were kind of moving stuff into cash for a while. And I believe what we're seeing now is a lot of that going back in, like Warren Buffett. He very, very publicly talked about how he was selling a lot of stuff, and I'm sure that money's going back into stuff now, or started to already. Um, the other side of it is there are a lot of geopolitical things that are going on that activity in that area. It was almost like everybody was kind of holding their breath to wait for this election to be over to see how everyone would approach things from there. Um, there's been no immediate reaction that makes anyone think that, at least that things will be any worse than they currently are. And there have been, whether they pan out or not, there have been slight references to ways that things might end up getting better. We had Putin talking about how he was interested to hear what Trump would have to say about creating peace between Ukraine and Russia. Um, there were statements made by Hamas about things that are going on in Palestine and Israel. I don't know if I would really take that statement. I'm no commentary on this stuff, so I don't know how positive I would see some of those statements at this point. I don't know if I don't know how ready people are there to actually try and make some peace. Um, but at least on the outset, there's nothing immediate. No one immediately stood up and said, "Oh, that's it. He won. That's it. We're going to war." None of that happened. So um, the point that I'm getting at is we don't see any catalysts at this point that are going to immediately start pushing the market back down. We've just gone through a bunch of ERs and everything. We're going into the holidays. So I think for the rest of the year that we can overall continue pushing to the upside. Um, the and of course, I'm always talking about the market as a whole from the perspective of SPY. But if we also look at other things like take a look at the Qs, we're seeing similar ideas. Just let me adjust that all-time high for the Qs. If we look at Dow Jones, it's doing the same thing. Even IWM, um, the Russell representing small caps, even that has been pushing a lot harder in the past, well, this year, than it had. Remember, all through end of 22 up until the start of 2024, even though it was moving, it had stayed relatively flat. And this year, that started to even come up. And especially in the last week, there was a big push on it, as there was across the board for everything. So I always look at if you think about big investment firms. Sorry, I just realized Steve's going to kill me because I didn't hit record. Um, so if you think about the big investment firms, they obviously don't put all their money into one thing. They want to spread it across different risk areas. And when you think about small caps, it's generally seen as higher risk, not significantly higher, not crazy, this is gambling, but it's definitely seen as higher risk. And so one of the things we talked about when COVID, sorry, not when COVID hit, but once the Federal Reserve after COVID, when they said we're going to use every tool in our tool belt to prop up the market until the economy recovers. This was this big push up here. But once we got into 2021, while everything else kept going up, small caps capped, and they kind of stopped and they moved sideways through that period. And what we were reading from that was that the big guys knew that the money train was going to stop at some point. They knew that Powell soon was going to start saying, "Hey, all this money that we've been putting into the market, we're going to stop. And not only are we going to stop, but we're going to actually start reducing our balance sheet." Um, and of course, if you're looking at starting to rebalance your portfolio or you want to start making changes, well, the first thing you're going to do is you're going to stop investing into your high risk stuff. And that's what we perceived happening here, where they didn't start selling the small cap stuff, but they stopped investing in it and it just kind of went flat. And then in this period, this was when in October, November of 2021, Powell came out, and that's when he made those statements. And he didn't say exactly when, but they said it's going to happen. And so we immediately saw a whole bunch of selling um, in the high risk stuff and a whole lot of portfolio rebalancing. Um, and when they finally said, yeah, it looks like we're going to start sometime around April, which they did, started reducing the balance sheet. And at the time, Powell had said that they were going to reduce the balance sheet by about $1.4 trillion. And he said that it would take them until about January of 2024 to get that completed. And that did happen exactly as he said it would. And we even at the time we speculated that we would start to see the market come back up because regardless of what that final decision was, if that was going to be the where things were going to change, then for these big brokers and stuff that had moved all this money around, it was now going to be time for them to sort of rebalance and start reinvesting. They don't want to wait until Powell says, okay, we're done for them to now scramble to get into stuff. They want to start building their positions before that. And that's what we saw in the last quarter of 2023, building up into that. Um, so as far as where we go from here, overall, it really looks like things are going to continue. And I think we will go through like we normally would into the end of the year. There'll still be, people talk about Santa rallies and that sort of thing. It's January that's going to be the unknown for now. So let me go back to SPY for a second here. I still think that 610 is viable. Less to do with anybody in the Bush administration trying to make it happen, but just because the market's going to continue to be very bullish. And so the rate that we're growing, like really, if you think about it, if SPY is at 595 right now, that's only $15 to get to 610. That's like 3%, less than 3%. That's a pretty easy move, especially when you consider um, the amount that we've moved just this week. We could easily do that over a month. So yeah, I think we'll be up in the 610, definitely above 600 and probably above 610 by the end of the year. As far as movement within it and taking entries and stuff, that's a little more difficult. The pullbacks that we have been having have not been major. Let me see if we've got some better. Yeah, so these areas here basically being areas of, well, now I'd be looking at them as potential areas for support. So for now, like definitely I wouldn't be looking at shorting any of this stuff, but instead what I'd be looking at is from the SPY perspective in particular, I'd be looking for prices to when they do drop, to watch how they react to these zones and look for potential bounces. Either at this level or if they're a little bit stronger and they can get through that down into this level and come back. But at each one of these zones, I'd be looking for those to be support. And I'm just basically every time stuff comes down, I'm looking at this as dips that we can buy when they start to turn back up. It would take right now for SPY, for me to want to go short on SPY, I would need something like price coming all the way down into this area, coming back up like this, and then rejecting. I'm going to really mess up this drawing here by trying to do this freehand, but essentially if this zone sort of continued like this, something like that, then I'd look for the price to break back down under that zone, come back up and retest it as resistance. And only then would I potentially look at shorting something at this level. So what I'm trying to say is it's going to be quite some time before I have any interest in long-term shorting anything. Well, I can't say anything. There might be some stuff out there that I would definitely consider, but in general for the market and SPY in particular, no. And just looking at buying dips right now. Unless I get something like Hindenburg Research talking about stocks that they've pinpointed as problem areas. That sort of thing I might be interested in shorting, but across the market in general, no. So that's kind of what I've got for the market. I also wanted to check, have you guys got other, if anyone has stocks or anything that they're interested in that they wanted to see for a particular stock, get a little bit of an analysis done on them. I mentioned the ACNI chat, the Advanced Charting and Indicators chat, which is one of the courses, the chat for one of the courses that I teach. We kind of do this sort of thing on a weekly basis, like I said before. So we'll generally go through, we'll talk about stocks and kind of review them. From the bigger picture like this, we kind of actually a little bit smaller picture than this, but we'll generally look at the stocks and find these areas. A lot of the setups, just like we discussed here. As an example, I was looking at BA earlier because I've been watching BA where it's come down to these major areas of support, these zones, and it can't seem to break under them. So I've been looking for areas where it's going to start to bounce. And I'm actually looking right here for an entry on BA. I actually took the entry today. So I'm looking for this to continue up based on that analysis. So Amazon, let's take a look at what we've got here. So Amazon's another one. First of all, if I look really big picture on this, let's just zoom out and just make sure. Yes. So Amazon is another one that is sitting around its all-time high. Just like to mark these in for stuff. And so with this push, it would be hard the way this is sitting to say, oh, okay, you can just get into this. The way I always teach people um, about entering trades always has to do with finding cycles in the direction that you're playing in. Looking for cycles that are moving with the trend. So as an example, you could see we had this cycle where the price came up, and you could see the wave coming up to this higher high here, came back down, started another one, came back down, started another one. And so these are what I'm referring to as cycles. These waves are contained within cycles of movement, either bullish or bearish. And when you have multiple cycles that are pushing the price in the same direction, you get a trend. And in particular, I always tell the ACNI people, it's these threes and fives. Those are usually the highest probability cycles that we like to play. But anytime you have a cycle that's moving with the trend, the saying is there for a reason. The trend is your friend. So we always try and find cycles that are moving that. So at this point, I wouldn't look at Amazon and say, okay, I'm just going to buy this now. What I need is I need some sort of bearish cycle to set up, and I'm just drawing it in here. It doesn't necessarily have to happen here. The price could come up for a bit, but I'm looking for that cycle to start, for it to pull back to somewhere, find an area of support like what we're seeing from this zone here, and have it turn around and start a new cycle to the upside. This is where I would be looking, as long as it doesn't break under this zone. So right now, that's like the 202 level. I'm looking for a pullback on it on these bigger time frames, not intraday stuff. Like the 4 hour, the daily, the weekly, those kind of bigger time frames. Look for a pullback, wait for the signals that a new cycle is starting in the direction of the trend. I want to get now. This is bigger picture stuff, so it's not something that generally happens within a day or two. Probably potentially something that we could see in as close as a week, or it could take up to 3 weeks or so. But that's what I would be looking at, is in a 1 to 3 week period for this to kind of pull back, give a spot to enter, and then come back. Because at this point, I wouldn't look at ways that I wanted to take this short. I really don't see that as a good direction for it at this point. Even though I am looking for a bearish cycle where it is going to come down, that's not what I want. The movements that you take, if you play cycles that move against the trend, they're generally going to be riskier, shorter, and pay less than if you wait for the cycles that are moving with the trend. As an example, when you compare the distance for this compared to how far this one ran up or how far this one ran up. So yeah, I am waiting for a pullback, but I want it to actually be pushing to the top side. That's what I'm looking for. Sharon was saying that the futures are at 606 right now. Yeah, officially over 6,000, huh? Assuming NQ is doing something similar. Yeah, way up there. The other thing, just as a side note, I don't know why I put that. That's not what I wanted. It's supposed to be an L in there. Gold. If you can find a way to invest in God, good money to be had there. It's very profitable. Geez, I haven't updated this all-time high in a long time. The the other thing on a personal note, so when we went through all this stuff over the past couple of years, in the start of 2022, all my long-term investment retirement stuff, I took that all out and I moved it all into precious metals, gold and such, mostly gold. And then my plan that I had always told people, the ACNI people in our chats and stuff, I always said that my plan was to hold this until the election, and then I would sort of redistribute. So um, I actually sold, and now I'm at a point where I am starting to look at where to redistribute everything into. So I've been kind of waiting and stuff myself. So I'm looking at a lot of these same things, waiting for these setups that we're talking about across multiple stocks, so that I can start shifting that money into those instead. But yeah, same idea. Um, Steve was saying that he bought lotto tickets. Anyone here that hasn't taken the ACNI course and have this system? Oh, okay. You can email Steve for a $100 coupon off of the course. His email is listed there in the chat. Anyone that took it and isn't in the live stream, because we do a live stream of live trading on Tuesday and Thursday mornings. If anybody's interested in that as well. But obviously you have to be familiar with the course and stuff. Yeah, not seeing anybody else asking about any other stocks. So anything else that anybody wants to ask about? I mean, it can really be about anything: stocks, options, charts, coding for charts, custom indicators. Oh yeah, this is an interesting one that I just threw. Oh, actually, you know what? Why don't I? Oh, where'd it go? This one. I'll just kind of hide this other stuff. I'll post the link for this just because I thought it was interesting enough that I would just give it out for free. Just make it available to everybody. I'll just put this top center just to make it a little easier. So what this indicator is, it's something very quick that I mentioned. So obviously most of us are trading in options. And so what I usually end up doing is I was always getting into a trade, and then I would quickly sort of work out in my head mathematically different percentages, where the 10% profit is, 20% profit, 30, 40, 50, and where 10% loss is, where a 20% loss is, because depending on how the market is moving, sometimes I'll use, like I've got a level, um, I've got a level stop where I know that the trade is moving against me and I'll take that. Or sometimes as a percentage, I will make that adjustment. And, if my stop is too far and because of the options, it's accelerating into a big loss. I would rather take a percentage loss instead of wait for that level. So anyway, the point was you could do this in an Excel spreadsheet, but I wanted something that was right on my charts. So I just kind of threw this together, and now all I've got to do is when I buy an option of something, I can just go in here and let's say I bought it for like $1.25. I can put it in there and just hit OK. And it's just automatically going to throw out those percentages. Like I said, it's very simple, but I wanted something that was right on my chart. So I don't have to switch screens between stuff. I can look as a quick reminder myself to say, oh yeah, this is the level where I hit 20%, 30%, 40, whatever. Um, because I like to take partial profit along the way at certain percentages, just to make sure that I'm locking in some gains as we go. So let me um, let me switch this over for a second. Oops, that's not what I wanted to do. So I'm just getting the link for that for people. I mean, obviously it's just for people that are using TradingView. But I will, as soon as this comes up, I will post the link for it. Okay, there should be. I will just put this right in the chat. So if anybody wants it, there's a link for it. You can add it to your charts. Okay. Steve had mentioned the GG system and how it will work with Trump. Um, well, I mean, the system is based strictly on technical analysis. So the fact that we're changing administrations doesn't really change anything. Um, because it's built on technical analysis that's calculated through the movement of the price, it doesn't really matter what made the price move. It's just the characteristics of how it's moving that are going to dictate what that trade is. So it won't really change much. Now, we have over the past while, we have made some modifications to the system. Um, some of them some of them were slight technical tweaks. We also automated some stuff so that there was a lot less, people asking about stuff. Everybody knows now that, like in the GG chat, everybody knows that at 3:45, the system will automatically post um, what the analysis is, just so that people can verify. People should still be doing your own just to make sure you're familiar and comfortable with how it works. But at least people can verify and make sure that they're reading it the same way. And if they're not, it gives them a chance to ask questions and make sure that they get sorted out. And then the last thing that I did, as someone who trades more conservatively, there were also a slight change that I made was on days where there are like financial news items or economic news items coming out in the pre-market, especially ones that are marked as high volatility news items. Because GG is based on technical analysis alone and it can't see fundamentals. So because of that, we tend to avoid those days where there's additional risk based on fundamental information that can't be seen within technical analysis. But I think overall it's worked out pretty well. I think I know because I always post my performance to the whole thing, and I know I hit for the year so far I'm over 2,000%. Always using the same amount, like I don't compound, so it's worked out to over 2,000. Last year it was over 3,000%, and I was really trying to hit that. I don't think I'm going to hit 3,000% this year, but I'm not crying about that either. The 2,000 is going to be just fine. But other than that, yeah, I don't really see any other changes happening just because of the change in administration. Looking at Walmart. So Walmart, like a lot of other stuff, they're pushing up new all-time highs and stuff. Now, Walmart in particular, if all this tariff stuff happened, that would definitely cause some concern for Walmart long term, but that's not, um, it's really not something they've got to be concerned with uh, for a few months at least. So short term, we're still way above this zone. And what I'd be looking for is, um, as we keep pushing up, what I'd be looking for is an area now where, because you can see here, we're in this five that's here, we're pushing to the upside. And what I'd be watching for is to see as this pushes up, first of all, is it going to push through this because this area that was potential support is acting as resistance, potential resistance right now. So I'd be looking to see, does it curve down immediately? And if so, does that start a bearish cycle to the downside, giving it a lower high than this previous high? In that case, I'd be looking potentially for a short, not a really long-term one because we are still above some major support zones here. But even with that, this is a $4 move on a on an $80 stock, meaning that's about 5% of the stock. If you can get options and get a 5% move in a stock, you're going to get paid very well. So I wouldn't be overly concerned about this because we're not looking at getting beyond here. Even getting like a $2 move down would be fantastic. But I would be looking for that to um, potentially start that cycle here. If it doesn't, then I would still be watching to see if it breaks above that. I'd still be looking to see if it turns down and starts a bearish cycle before it breaks that all-time high up there. And I'd be a little more cautious in this case because it broke over this green zone here. But I would still be potentially looking to short it from there. If um, if it hadn't broken through that zone and it had come a little bit closer to it and sort of started this bounce at the zone and started coming up, in that case, I would have been looking to take this long and keep pushing up. But I've got to see how it reacts to this zone before I do anything else at this point. Bigger timeframes in mind, could you expect Trump in office to cause VIX to have a bit of a higher baseline? How is market volatility with Trump in office compared to Biden? That one's really, really difficult because there were extreme circumstances going on during Trump's administration. He rolled right into tariff fights with China, right into COVID, and COVID was that was just completely unpredictable. And so it wouldn't be, you wouldn't ever get anything accurate by trying to do direct comparisons. Similar to what I was saying earlier about George Bush. He spent his entire presidency fighting a war. So it's very hard to compare. You know, he's bookended by Clinton, who had the best performing, a market that performed best out of all administrations. And then Obama, who was probably in like the top, definitely the top five, if not the top two or three. Um, and it's very easy for someone to look at that and say, oh, well, obviously George Bush just didn't really perform during that period. There were circumstances that neither of the other two really had to deal with during their presidency. So it's not accurate to try and make that kind of comparison. Now, do I think that this will change the baseline? I really don't know. The problem here is we're going to have to spend some time separating the wheat from the chaff. There were a lot of statements made by Trump about policies that he would put into place if he won the election. And some of them are just not possible. Um, some of them, if the right people got involved and made the right changes, then it could be something that could happen. But we don't know for sure which ones are actually going to get pushed through. And without that, it's very, very difficult to give any sort of plan for where any of that is going to go. We've got to start looking at what policies, well, like once he starts talking about actually implementing some policies and we see which ones actually get passed through, then we can start more speculation, but I think it is way too premature to try and work out a plan for any of that. For now, we just enjoy the ride. Let's see. For Secret Sauce, Greg avoids trading Tuesdays and Thursdays. Since the ACI live is on Tuesdays and Thursdays, is it catching different types of action, or is that because the live with Greg is on the other days? Um, Mostly, there were two reasons. One, um, I didn't want Greg and I to be stepping on each other's toes. I didn't want anyone to have to make the choice. I have to go with Greg or I have to go with Trax. We didn't want to do that. Plus, I also didn't want to commit to 3 days a week. I only wanted to do two. So mostly it's, I don't expect the action is going to be much different. I mean, sometimes there are reasons why they are, but for the most part, I don't expect the action to be that different. Now, that being said, the way the markets, the way the intraday movement has been happening going into the election has been a little bit different than we normally see. We we saw a lot more um, full day trending where you would get, once the market picked a direction, it would stay in that direction for most of the day with very few pulls in the other direction. That makes it very hard unless you're willing to get into a trade and just hold it for hours and live through the pullbacks and probably be a little more conservative in how you pick your options to deal with that, the volatility and the pullbacks and stuff. It makes it a little bit harder to trade. But that's not just a Tuesday and Thursday thing, that's across the board. Yeah, and then Steve was commenting on the Greeks. Um, yeah, you've got to look at the when you look at the Greeks for Walmart, it's a different beast than when you look at something like Spy. Spy at $500, almost $600, and understanding the movement that it makes, the range that it generally has, the options are tailored for that. And so this is actually something we were talking about today in the live chat, was that when people are looking at the options and stuff that they're trading, they've got to understand the underlying stock and how it moves to understand what types of trading work best uh, for that. And like Steve was saying, even though um, Walmart spends most of its time going up, it's been like that for a very, very long time. But when you can catch the moves, they can be very, very profitable because of the way the Greeks work with it. You get very quick um, the levels that you get with the changes in the IV through your Vega create very quick accelerations in the options, even though you're not getting a huge movement. A couple of dollars move is all you need for that to accelerate into really good gains. And that's just one example. Let's see. So I'm not seeing any other questions. Any other questions, tickers you guys want me to look at? Um, Yeah, I think overall the view is that things just kind of continue as they are up until maybe around the holidays. We'll start to see a little bit of a shift, a slowing down, definitely some volume coming out, and then we'll probably get the typical, outside of everything else that's going on in the technical analysis. There are people that, from a fundamental point of view, they need to do things like sometimes people have reasons, tax purposes, why they have to sell stuff or they're going to want to make some changes. So we'll see that usual stuff happening towards the end of the year, and then we'll see the transition in the beginning of January, and then we've really got to pay attention. And I think we'll have some really good discussions about um, long-term plans and what we should all be looking for over the next couple of quarters once we go through that. Yeah, I agree, Sharon. Having that discussion on Greeks just in general for people to get a better understanding of it. Not just Greeks, but a lot of other things that are related to it. Like understanding the beta levels for stocks and those sort of things. Uh, it would be good for one of these evening sessions for people to go through and discuss it. Hint, hint. Um, All right, so I'm not seeing any other questions, so I guess we can call it a night here. Thank you, everybody, for showing up. I know this takes people away from everything from work to putting kids to bed to just trying to get some relaxation in the evening. So I always appreciate when people show up to listen, and I hope it was helpful for you all. Um, I normally do a little spiel about taking the CNI or what we do with the CNI or ACNI courses and stuff. I'll spare you guys, but the information is definitely there, so you can always hit up Steve, ask him about all that stuff. He's always happy to get people informed. And that'll be it. Everybody, have a great night, and we'll talk to you all tomorrow.